Hey there, everybody. Welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I am your host, Dr. Michael LoPiano. Wonderful to see you guys again, as always. Yeah, just we're still in it, right? I mean, more of the same. It kind of looks like, right, that we've seen a lot of correlation with what our broader market is doing, which is really kind of not moving out of this downward momentum sort of situation that that I've been talking about for a bit now. Doesn't look like it will anytime soon. Well, maybe soon, right? We might have kind of a bigger sort of bounce back. When we get down to when you get to that 565 level, maybe over in SPY. But we'll spend some time talking about what I'm looking at there. But really, the topic of today's video, the cycle closes. So, Richard Newton's been talking about this a lot. In fact, right, his entire spreadsheet is devoted in many ways to being able to try to map some of these cycles. We've been talking about these instances of price transposition, as I've called it, right, typically to the downside. But we have some interesting factors popping up for us today that are worth considering. Not quite sure what to make of them as far as what it will mean or could mean for our price action going forward. But I'm going to point these things out to you guys. We'll walk through them, and then I'll share my thoughts insofar as I think what it could mean. And we just got to see what happens. That's ultimately what it comes down to this week. So let's hop right into it. First off, our gratitude. Right, today's newsletter is brought to you by Roa_Noke. Thank you, Roanoke. I wonder if you have anything to do with the island off the coast of North Carolina. In any case, many thanks. Thank you for supporting today's newsletter and today's video. And of course, thanks to our monthly supporters, That's Grufto and Ken Wedmerland, who generously help offset some of my data expenses every month. I sincerely appreciate your support each and every day, each and every week, each and every month. And to everyone who has supported me thus far and will support me in the future, thank you as well. You help keep all of this content unmonetized, completely free, open access. So thank you very much. So I mean, market context wise, yesterday's trading more or less kind of matched up pretty closely with what we saw in our overall trading. Very low volume day, again, under 3.5 million shares. Right, SPY, right off the open, we got that break of the 575 volatility trigger of this large put position. What we see a lot of the times, it doesn't always result in an immediate kind of crash through that level. But generally, when we do see that, it does result in, at least for some point later in the day, a deeper push down. So as we can see in the way that our put gamma is arrayed here over on SPY, right, we have these big rungs, these very large put positions, these net put gamma positions, and they severely ramp up volatility. So as we fall through them, volatility ramps up pretty big. And then especially in positions like this, like around 575, where we have a fair amount of put gamma stacked up in between our $5 strike position. So in between 575, in between 570, and what that results in is something of a smoother transition back to the downside. Now, it can mean a transition back up if it wants to, if traders want to take things more volatile back to the upside. But as we can see, right, in these types of conditions, we're moving to the downside. Momentum is to the downside. We have a ton of put gamma underneath us. When we have those snapbacks back to the upside, we usually see something like the price will stop and then reverse back down harder or deeper to the downside once it hits something like a sort of neutral gamma zone. So if we go back and look at our SPY chart here, that is what we saw, right? We move up intraday, right up, right? We get into that 579 territory. It's neutral. We have three kind of 1, 2, 3. We don't really get in there. We hit that top VWAP line. We got the 200 simple moving average coming down, and options traders go up. 1, 2, 3. Ding, ding, dong. Down we go. So down we went back again. Traders sold that hard, right? They built up some bearish positions in here for their intraday moves, and then straight through VWAP down to VWAP green line, scrub a dub a little bit. And of course, because earlier in the day, 575 proved that it did not hold up, we move straight through that position. Scrub a dub because put wall effect. So gamma spikes a little bit. We get or I should say delta spikes a little bit because we get the IV effect as those contracts appreciate while going down. I should say depreciate a little bit as they go down, right? In terms of their delta value. So scrub on down. Didn't make it through 570, so we reverse back to the upside a bit. More kind of scrubbing on top of this level. Didn't want to give up, so then toward the end of the day, we reversed back. Still below 575, but, did get a little... Did retrace this again, essentially, early because employment numbers, and then instantly fell off to the downside, and now we're back at like 571, right? So, reasons. What would joking around with some people today, right? What's all this about? What's really going on here? What's really bringing these about? Is it sources like sources familiar with the matter, people close to the information, something like that, or is it as Roaring Kitty would say, beep boop boops? So maybe some beep boop boops, right? Doing beep boop boop things, pushing the price around because the word unemployment came out. Unemployment, but otherwise we just kind of went back into our trend there after a few minutes. So, what are we looking at in the broader market? More of the same, more of what we've seen for the better part of 3 weeks. Volatility up, price down, technicals weak, momentum bearish. So just more of that is what it looks like. I would say the price level that probably looks like something of a potential stopgap at this point over on SPY is our 200, no, excuse me, not our 200 week. Be our 50-week moving average. Let's go pop over to some live charts. Everybody loves the live charts. That's what we do here. This is finance YouTube. We love charts. Chart. Okay, so that's a big right now the double top. Now we see the double top. Now that it did this. Now that we've got a nice big 3 red lines here, yeah. Now the double top is pretty clear, hey? That's a double top. That's a double top. That's a double top on the weekly, and that's bad, right? That's bearish. That's bearish. And so now all those momentum, we were pointing this out a couple weeks ago. The momentum stuff, not looking great, right? And hey, I can't take credit for like coming up with this or discovering this, right? This is Roaring Kitty's. This is Roaring Kitty's price momentum oscillator with a 55 moving average signal line. This is what he has used in order to track momentum on GameStop. But hey, it worked pretty cool here over on the weekly on SPY and gave us a little advance warning that we're going to get something like this. So probably going to go deeper, right? What I pointed out in some of my earlier articles, I think over the past couple weeks, definitely go take a peek at some of that if you get the chance, is the last time we had this little thing happen, it turned into a little bear market. It turned into a little 2022, 2023 bear market. And we went all the way down across all of our moving averages. We did, however, have a nice hang up right there at the 54-hour moving, or excuse me, 54-hour, the 50-week moving average, right? So we had a nice, went down there, ooh, scary, and then came back up, and then, oh, okay, ooh, deep breath. Oh, and then we went back up to the 20. Could we do that? Down, 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 bangarang. Get a little reprieve. Maybe we spend one more red week kind of pushing through this thing. and then maybe March OPEX as people start cashing out puts. Maybe they cash out some puts. Maybe we come back up. Maybe we we do a little 20 SMA because it's kind of far. The 20-week SMA, I'm not going to lie, it's kind of far, right? It's up at 595. Not saying we couldn't bounce up that way, but this is, yeah, certainly the deepest bit of correction we've seen since the beginning of that bear market. So not crazy yet, right? Not crazy yet, but maybe something like this. And then we get a little reversal back there, but gonna be kind of tough, right? Momentum situation very different here versus here because we got that's not good, right? We don't like that. So I think, yeah, maybe a little hang up, but maybe fall through then hang up. I don't know. We have this historic level back here, 565, right? That's probably actually the fact that, yeah, 565, right in this area. So do we bounce through that yet? No. We're actually, well, we're pretty close, right? 570, 571. Why not, right? Why not just, go straight through 570 like today or Monday or something? And this, a lot of this right now might have to do with, again, COVID stuff, again, or that is COVID loans coming due, right? And unwinding the yen carry trade. We have to see. But I really see no reason at this point why we should expect anything different from what's going on with the market. We have such crazy correlation between what SPY does and what GameStop does that I joked about this, I think, last week sometime. Like, man, I should, with this kind of stuff, I should just go trade SPY, right? Why trade SPY on a lower range when I could just trade SPY? But I don't, because that's not why I'm here. It's not my objective to make as much money as possible trading. That's not my goal. My goals are to try to understand what's going on with GameStop, to use this opportunity to learn as much as I can about what's going on with the market at large, how institutions use the unwritten rules of the system, the actual rules of the game, in order to play the game, rather than just doing what would be easiest or necessarily make me the most money in the immediate term. So for that reason, I have no plans to go ahead and start trading SPY. But in any case, it's important to take note of it because, again, of how it seems to be affecting our price. Well, speaking of which, right, went back down to that 23.8, right? We did talk about that yesterday. Had some of that slippery put area down there that if we did get a bearish day, where'd we go? Yeah, we'd go back down 24.50, 24, and possibly even into the 23.50 area, which we did after hours. But of course, it wasn't shy, right? We got another Roaring Kitty share order there, another 25.69. Now, that is the third 25.69 order we have had this week at 8 p.m. Is that correct? Is that the third this week? Yeah, today's Friday. It's the fourth 8 p.m. order. So this is very interesting. We have not seen this type of frequency from, this mystery 69 buyer, whoever it may be. We've not seen this frequency, but very interestingly, yeah, 4 in 1 week, 3 of them at the same price, 1 of them at 26.69. What could it mean? Don't know, but very interesting to see the frequency step up here. Nothing super crazy, like kind of just looking at the candles, looking at our volume, anything like that. Some interesting orders. So probably the big one is one called out over here by Ultimator 5. Ultimator always on the money with this stuff. Excuse me. Ultimator, first one to call it out, 1 million share creation order over on XRT. So what does that mean? 1 million shares. That is an excessive amount of volume over on XRT, right? It's daily. That's about 10x its daily volume on average. If I'm not mistaken, we can go take a peek. Oh, let's go take a more charts. We are the chart people. Oh yeah, look at that. Not looking great. Let's see, this week. Oh, this is week. We got to go to the daily to see what it does every day. Yeah, so definitely been up. I mean, yeah, we're usually down in the 3, 4, 5 million. A little spike up once in a while. 21st of February was the last day that we had big volume on XRT compared to today. But yeah, this is the highest we've seen since, oh gosh, a really long time. I mean, this is the highest we've seen since Roaring Kitties returned to Twitter, right? The 14th of May, 13th and the 14th of May is the last time we saw XRT volume. Now, those were much bigger, but I mean, I'll give it, right. 21st of February is very close at 10.89 million, and we're at what, 10.91. So very close, very close, but a suspiciously close amount of volume. In any case, to see a 1 million share creation order come through after hours, very conspicuous. Very conspicuous. What could that mean? Right. So we know that institutions use XRT in order to create extra liquidity in order to deal with GameStop. However, we haven't really seen any corresponding action in the price. What could this very large creation order possibly mean? If there is some sort of catalyst coming up, if, let's say, a very large number of FTDs on secret FTDs that are floating around in the ether, floating around internalized in settlement limbo, have to be closed, then this would create a substantial amount of liquidity for institutions to prepare to contain the price under the circumstances that someone would need to buy a large amount of GME shares, right? They could use these in order to create liquidity, in order to replenish the pool of available shares to short, and then be able to use those in order to start a new type of FTD cycle. Something, right? Richard Newton's been talking about this, especially. He thinks that indeed this period, right, the yesterday and today mark the end of a full ETF, a full creation redemption cycle, and sort of the internalization of a certain number of shares, perhaps the shares that were required in order to adjust the price all the way back prior to January OPEX. So that cycle is coming to a close, and so that what we are seeing here may be some of the signs of a transition between cycles. So a full transition out of that previous cycle and preparation to enter into another broader cycle. So this would be something, right? So this would be something different. We can talk about this more on the stream this weekend, but right. So this would be, yeah, a full ETF FTD cycle as opposed to probably what we saw earlier, maybe mid-February. Either that was the closure of something back in December, maybe a December OPEX cycle, or that had to do with a Rec 68 margin call extension closure deadline, something like that. But interesting to see this come through. Right. Also, pre-market, we saw available shares right at 8 a.m. Shoot down, right? Shoot down, right? They were kind of sticking around 2.7. Right? We were seeing a lot of 3 million yesterday, down to 2.7 million, and now it's shooting down to 2 million. So we've seen numbers. We've seen shares available to borrow stay pretty stable on GameStop for quite a few weeks here. I've not really seen, it's. And a lot of our numbers have been super stable, super boring. Like, I haven't had a lot to report to you guys just based on what I'm looking at, because it hasn't been like with this, right, it hasn't been much budging. A lot of my time has been spent looking at, the broader market and trying to understand what's going on there, because that's really what's been leading our price action. We haven't seen a lot of direct shorting. We haven't seen a lot of selective, order flow rerouting beyond the normal amount, like not egregious amounts. It happens every day, but not egregious amounts like we've seen in certain episodes of very intense shorting here. But to see the pool shoot down like that, this close to market open, not very common. And is it that some institution is using these shares, which have been in the pool, in order to close out FTDs, and perhaps this creation order is a part of a transition into a new period where those shares can be replenished in order to potentially quell a catalyst? Something like that. They could be used to go ahead and short the stock directly today, which, looking at our gamma, would probably be picked up very well if we get a bearish day in the market. If we go down to 565, I mean, that could be a trifecta to push the stock down to 23 or 2250 or something like that. We saw one trader open a pretty large 2250 long put position that expires today. Would love if that position didn't expire in the money, but maybe that person knew something that we don't know as far as prepping for this cycle. Additionally, we had some pretty large options orders come through. I mean, really, if we look at the short term, so unusual whales OI data back up and working again, which is good. In the short term, everything bullish, right? So these long puts at 24 off the board, somebody closed them, right? Those were almost in the money. Now they're not pre-market, but they were a little bit for a little while after hours. Somebody closed those yesterday. And yet opened over 1,000 long calls, right? Over 1,000 calls at the ask at 24. Somebody opened 1,700 calls at the ask at 25. Somebody closed 1,179 calls at the ask at 27. So these are short calls off the board, and these are long calls on the board. These are long puts off the board. So in the really short term, bullish, looking great. But if we go down, we had some massive short call orders for out of the money strikes. So I think the one that stuck out to most folks were the $29 calls that were sold short for April 17. So over 8,600 were sold all in one go at around 11:30 yesterday. Trader collected over $1.4 million in premium for selling these. I suppose we don't know for 100% sure if these are short calls, but that seems most likely. We also got two really big blocks. Yeah, this looks like this was a part of the same trade. Just weird, right? All at 3 o'clock on the nose and 16 seconds. All of this came in. So this was a multi-leg order. One was at the mid for 27. They are all for 2017. One was a set of 55 calls at the mid. Yeah, 2,500 of them. And then the same number, exactly, about 2,500, sold at 40 for 2027. And all of this when the stock was exactly at $24. That's a big trade. Not exactly sure what to make of that at this point. Have to take a look. We can maybe do some deeper dive at the live stream on that. Looks like some kind of it's definitely a multi-leg trade, but just the order at the mid makes that a little bit more difficult to check out. Looks like they're selling an out of the money strike. They're short an out of the money strike, but long a deeper a farther out of the money strike, potentially. I don't know why you would do a multi-leg trade at two different strikes that are both short. Not sure what the strategy is there, but I'll do some digging, try to figure out what I can figure out. But that was a lot of money too, right? That's pushing a total of like 3 million in premium. Yeah. We shall see. Max Pain still showing lots of 25s. Maximum Pain says 24.50 today. We've got about 97% of our calls out of the money. Usually when I see something like that, that tells me, okay, going into a Friday, we're probably looking at a move back to the upside. If I were just looking at short-term stuff, if I were just looking at short-term options and the like, and sort of ignoring mischief, transposition, stuff like that, we haven't really seen that type of stuff on Friday. Given the fact we touched 2380 again, I would say the most likely move today is to the upside with a close between 24.50 and 25. So 25 is now pretty strong. Still not technically our call wall. Our call wall is still technically $30, but 25's gotten pretty close. Although a lot of 25s will come off the board today. We'll have to see how that looks if dealer really tries to transform that into a new call wall heading into March OPEX. Very possible. But if we just look at our kind of normal options volume that we've seen recently, going to be really hard to overcome that. Would require some kind of major externality to push us through something like that. Maybe we get it right. Maybe this XRT stuff. Maybe what we see with the borrowing of shares. Maybe all that actually has to do with preparing for a major up move, right? Maybe we just teleport, right? Transpose ourselves back to the upside, and all that's to prepare in order to contain that properly. Maybe we see something like that. Certainly, if we do, it's going to be explosive. IV is going to go nuts. It's going to cause a ton of options market maker share hedging. That's going to really move the price up. So, if I was looking at just kind of short-term stuff, I'd say, yeah, we're probably in the 24.50, 25 range for close this week. Nothing, earth-shattering. If we do get if this stuff does have to do with a buying externality, we'd probably, again, I sound like a broken record here. We'd probably go back to 28.50, and then kind of cool off to like 26.50, probably midday, maybe 27, but they probably short it back down to 26.50, 26, something like that. Try to drive as much of this out of the money as they can. But also got to be ready, because maybe they just come out guns blazing and just find some reason, broader market weakness, to go ahead and push the price down. Maybe that's what this is about. It's hard for me to say. Part of this, I suppose, is to take a look at these different factors, to make a note of these, to look at where we are in terms of the context of our broader price action, and then say, okay, we see these factors. We see a big creation order coming in XRT. We see our options chain look like this. We see our technicals looking like they do. We know that this is about the time frame we might expect for one of these ETF cycles to come to fruition. What's that going to look like today? What's that going to look like heading into next week, where we have this big swap expiry, right, with Bill Huang swaps? Credit Suisse swap, right? Credit Suisse's re-up, I suppose, of Bill Huang's swaps, something like that. What is that going to mean? And maybe we can use this experience as a data point going forward to be able to predict what these type of sites, what these data can tell us, what the situation might tell us going forward in the future. So just calling some of that out today, right? We still got our IV obviously going up. Yeah, we have to wait and see, right? I know it's not as, a lot of this doesn't feel as climactic, right, as some of the things we were looking at, say, in the fall. Excited about that bull trend, right? Seeing this come together in September, October, and tracing this step by the way, like, okay, all right, here we go. and not well, like we gritted our teeth through some bearishness back there, right? We gritted our teeth through the Nikkei crash in August. We gritted our teeth through July, August. Maybe it was just that Roaring Kitty's return in May and June was so fresh, and we had the National Cat Day date, was really fresh in our minds, and we were looking forward to that. So, in some ways, a little bit easier there as well with, we say no dates or anything like that, but, we had that. But whereas this time around, I suppose the nearest stuff is earnings from Ryan Cohen in March 28th or March 25th, March 25th, March 26th. That's kind of our closest. Hang our hat on something. We even have Roaring Kitty, right, going, hey man, I'm gonna wait for you. I'm gonna wait for you. Haven't. Well, the company's making moves, but still waiting for something of a master stroke from Ryan Cohen to really kind of break these types of cycles, let's say. So we watch, we experience, we reflect, we learn, we move forward. Looking forward to seeing what today brings and to reflecting on this with some of you guys, with as many of you as can make it at our weekly stream, which will be held at 10 p.m. Eastern time after market close today. So this will be our last stream at 10 p.m. Eastern time. We're going to be moving to, I will be back in the United States next week. So look forward to the announcement for a different stream time. I won't be doing it at 10. We'll do it a little bit earlier, I think, in the day after market close, so we can get some of the EU crowd back in. We love our Euro crowd. So yeah. So thank you very much, guys. Look forward to seeing you at tonight's stream. Yeah, last week I think we had almost 600 people stop by on the stream. So we simulcasted this over to X and stuff. So yeah, let's see what we can come up with. Yeah. All right. We shall see you then. Take care, everybody.